Remember when we talked about the UK government and regulators actively trying to hide what's been the best performing asset of the last decade? Well, get ready for a major plot twist. The Financial Conduct Authority, after years on their anti-Bitcoin crusade, have just announced a monumental reversal. They're unbanning access to Bitcoin and crypto exchange-traded notes for retail investors here in the UK. So in this video, we'll dive into exactly what an ETN actually is, try to understand why the FCA have suddenly changed tack, what it means for the wider Bitcoin industry and market, and most importantly, how it affects you and I as retail investors. But here's the spoiler. It's not actually as wonderful as the headlines sound. And in fact, I think in a way it could actually be a step backwards for Bitcoin adoption here in the UK. But before we get into it, this video is intended for information and entertainment purposes only. It should not be considered financial advice. Any reference to financial products, investments, or services are general opinions and are not tailored to your personal circumstances. When investing, your capital is at risk and you may lose some or all of your investment. Past performance does not guarantee future results, so please always do your own research. But with all that out of the way, let's get into it. So first, some quick context. What exactly is an exchange-traded note, or ETN? Put simply, these are financial instruments that you can buy on the stock market that give you price exposure to an underlying asset. So a Bitcoin ETN aims to give you one-to-one exposure to Bitcoin's price, minus any fees. Now, crypto ETNs have been tradable in the UK since 2015, but in January of 2021, the FCA officially banned these products for retail investors. Their reasoning? Consumer protection, due to the perceived high volatility and lack of understanding from the public. Typically, they lumped Bitcoin with every other speculative crypto project, making no distinction, despite Bitcoin having an obviously different risk profile compared to every other centralized token. This ban severely limited how UK investors could get tax-efficient Bitcoin exposure, as ETNs could previously be held in ISAs and SIPs. But now, after 4 years of restrictions, the FCA is reversing course. From the 8th of October 2025, these products will no longer be restricted for retail investors. So I'm sure you're wondering, why the sudden change of heart? The FCA claim that the market has evolved, and some might suggest that it's all because of new investor demand. But personally, I disagree. The demand was there in the first place when they banned them originally. I also don't think that the FCA suddenly now believe in Bitcoin and crypto. The way I see it is that they simply had no choice, as the rest of the world is moving on without them. Just over a year ago, on the 11th of January 2024, the SEC in the US allowed the first ever Bitcoin ETFs to be listed. This was one of the most significant steps forward for Bitcoin in recent years, as these ETFs have been some of the most successful in history. BlackRock's IBIT was the fastest ETF ever to reach $50 billion in assets under management. Due to this, other jurisdictions around the world are swiftly following suit, and we're seeing Bitcoin ETFs pop up in a growing number of countries. Then, with the election of Donald Trump, his administration has adopted an incredibly pro-Bitcoin stance, announcing a strategic Bitcoin reserve, and they are actively trying to buy as much Bitcoin as they can get in budget-neutral ways. Even here in the UK, due to the frustration of such a hostile regulatory environment and the lack of Bitcoin ETF-like products, Andrew Webley IPO'd his company SmarterWeb as the first publicly traded UK Bitcoin treasury company. It IPO'd just over 3 months ago in April, and it's officially become the most successful IPO in UK history. So with all this undeniable success surrounding Bitcoin both globally and locally, I believe that the FCA felt that they had no choice but to follow suit to some degree. But what they've chosen to do, I think, could actually be more damaging than beneficial. And I feel it reinforces the idea that they still fundamentally do not understand these assets that they're regulating. Firstly, this is because they've relaxed rules on crypto as a whole, rather than specifically Bitcoin. Since the ETN ban, Bitcoin has only increased its dominance over almost every other cryptocurrency token, demonstrating that your money is generally safer in Bitcoin than in speculative, riskier centralized tokens. In comparison, when the US allowed Bitcoin ETFs, they started with Bitcoin only for this reason. It's the only meaningfully decentralized cryptocurrency. They didn't rush into allowing other cryptocurrency ETFs. Although, that being said, since then, there are now others. But the FCA, it seems, still sees Bitcoin and crypto as the same thing, which is insane. This continues to tarnish Bitcoin by lumping it with the volatile, scam-ridden crypto market. And honestly, I believe opening the door to all crypto ETNs is pretty irresponsible, especially if you believe in financial regulation. Secondly, the FCA has opted to allow ETNs only rather than ETFs. Now, that might not sound like a big deal, but let's quickly cover the differences. An ETN, or exchange traded note, is an unsecured debt instrument issued by a financial institution. You don't own any Bitcoin directly, but neither does the ETN provider, as they don't have to buy the underlying asset. This creates huge counterparty risk if the institution fails and leaves your investment at risk. An ETF, on the other hand, or exchange traded fund, while similar in providing one-to-one price exposure, requires the institution to actually purchase and hold the underlying asset, and this theoretically reduces the risk. ETFs are widely available products for tracking assets like gold or stock indexes, and large institutions feel comfortable holding them. ETNs, on the other hand, are far more niche and typically have much lower trading volume, and large institutions are unlikely to feel comfortable holding these things. Jacobi Asset Management have already created a UK Bitcoin ETF, and it's available for institutional buyers. But why is this being shielded from retail? I don't think that typical retail investors are likely to know the nuanced differences between ETNs and ETFs. And because of this, I see this potentially doing more harm than good for people who hold these products, without fully understanding them. Frankly, I just don't think it's good enough from the FCA, and it needs to change. Why force retail investors into inferior products? So with all of this considered, what should you and I do as retail investors looking for Bitcoin exposure, but in tax-shielded accounts like your SIP and your ISA? Well, my personal opinion is that I'm staying well clear of these ETN products. For me, they just create far too much counterparty risk that I feel comfortable with. My plan remains the same as it has until now. I hold Bitcoin itself because I believe in the future of the network. Yes, it's liable for capital gains tax when I sell for a profit. So that's why I also hold shares in Bitcoin treasury companies to give me tax-free exposure to the asset in my ISA and SIP. For me, this is mainly Michael Saylor's company's strategy, who hold over 3% of the total Bitcoin supply, and historically the share price has been very highly correlated to Bitcoin's price action. If Bitcoin ETFs are eventually authorized by the FCA for retail investors, I may consider them, but honestly, I'm pretty happy with my setup. Now, to make my life easier, one of the platforms that I use for investing is eToro. eToro is authorized and regulated by the FCA, and on the platform you can buy stocks, ETFs, and even Bitcoin, all in one place. They also offer investment ISAs, allowing you to make tax-free gains on your stock market investments. So if you want to give them a try, I'll leave my link down below in the description where you can check them out. And no, this is sponsored, so using my link will help to support the channel. Now, despite my skepticism of these ETNs, what impact will this change truly have on Bitcoin and the wider crypto market here in the UK? Honestly, I think it'll be pretty insignificant. This isn't like the launch of the Bitcoin ETFs in the US, where we saw enormous institutional investment. For institutions here in the UK, ETF products have already been accessible, so there'll be no change there. This will likely result in a tiny inflow of retail speculators who aren't particularly familiar with Bitcoin and crypto. Those with a deep understanding of the space, I imagine, won't even want to touch these products, due to the counterparty risk, which goes against the core principles of Bitcoin and self-sovereignty. Sadly, I do imagine that people will get burnt from these ETNs by simply not understanding the crucial differentiation between Bitcoin and other cryptos, or maybe by not grasping the technology or the typical volatility. This could lead to continued pain from people buying tops and panic selling bottoms, only adding fuel to the narrative that Bitcoin is too risky and best avoided. Hopefully, the FCA will eventually wake up to what I think is negligence, but unfortunately, they seem to be making a habit of being the slowest movers. Now, I hope this breakdown helps you guys in understanding this change and how it might impact the market, as well as what it might mean for you and I as retail investors. But I want to know your thoughts on the FCA's decision, so let me know down below in the comments. If you did get value from the video, please drop a like down below and subscribe for more Bitcoin and UK finance related content. Also, check out this video on screen now to my full breakdown of why I believe in Bitcoin and not crypto, and how it's really not too late despite the price sitting at above $100,000 per coin. But until next time, take it easy and enjoy the rest of your day.